This week, it's really interesting. Here's why. A lot of companies have their earnings reports that came out. They are already reported. In the previous video, I mentioned that I would be focusing on the important companies like Visa. Visa came out with a strong report, and it eventually affected other stocks. The others came out strong either. Tesla was great, except Meta. It did come out strong, but the stock price dropped. It was having a sell-off moment. It's because during the earnings call, Meta CEO Mark revealed that the company would increase its CapEx, its capital expenditure. It has to do with investments in the company. It will be focused on AI infrastructure. The company aims to spend more its budget into AI infrastructure. It has an AI application called Llama. It's what they are going to focus on. Therefore, the investors panicked because increasing CapEx costs capital of the investors and the company itself, so it led to sell-off. But if you see Meta as a long-term investment, go for it. I don't invest in it because I feel it's not my thing and I don't see value in it. I do invest in other businesses, like Google. I see that Google has a lot of upsides. So, Tesla, it came out strong. It's because Elon announced that it will make a new cost savings model. The company wants to create an affordable model so more people can afford the other model. So, the new model will be developed for general people to afford it. And plus the news related to FSD, which attracts investors' attention. FSD is a huge part of EV industry. It's a game changer for the future. So, in the past, FSD used to charge $199 per month subscription. Now, it's $99 per month. I think it's fantastic. It's because Elon is a genius. By decreasing the cost, it means FSD can collect more data. If a FSD car got messed up or had an accident, it is being collected. Tons of data will be collected, and then the data will be fed to the AI. It allows FSD to get better by time and time. And Elon emphasized that Tesla is an AI company, not a car company. Let's see. I, however, still see it as a car company because the most revenue comes from selling vehicles. But in 10 years, it maybe will evolve at some point. Like Apple, it used to be a computer company. Now, it literally makes everything, various products, such as iPhone, iPad, and more, even my watches. So, you get the idea, all of it. Google, which I invest in it. It came out on Thursday. It did good and strong. The price spiked. I knew it. Before it happened, people didn't want to buy Google because they didn't see much potential in it. It didn't innovate much new, like AI. One thing I've noticed that it doesn't get much AI hype, but I looked at their earnings, fundamentals, and quality of the management. They are perfect. Here's why. You have to think that Google has big market share of advertisements, Google AdWords, and plus YouTube and its search engine. It's telling us that Google has billions of data that is being collected and fed to its AI. Google will be ahead of their game very soon. I believe that. Google is not like Nvidia, where it gets so much AI hype, in Microsoft. Microsoft announced theirs on Thursday, the same day with Google. It seemed it did good. Nvidia will announce theirs weeks later. Don't worry about it. The most important thing is paying attention to this week's earnings, as it did good. We now know that weeks later, other companies shall have their reports coming out good, and the next quarter will be thrilled. Actually, the overall market tells us you ride with the trend or you miss it. You decide. It's your chance to ride with the trend before the election season. Now I want to bring something you would notice that people have been saying the election affects the stock market hugely. But is that really true? Okay, let's get into the question. That's the question. See that? What do you think based on the rest? 100 years of history. It will shock you. No, not really a big impact since 100 years. I noticed that S&P 500 and the election seasons have the same correlation. Not really a big impact. I'm going to show you. You can see the different presidents having the elections, not really an impact. It's almost the same with S&P 500, but instead of the question, does an election impact the stock market, the other better question is, that's the question. The winning administration, in general, not just presidential election, like House or congressional election, whether the party wins the control, does it affect the stock market? Yes, definitely. Here's why. Obviously, the party whoever wins affects on how policy will be made. It's the winning party who will be in control of signing or passing a bill. If you focus on S&P 500, probably not a big impact because it includes all sectors. Not really a big impact. But if you invest in an individual stock, it's going to be a big impact. Understanding a sector is important because sectors have different types of policy favors. Like you can notice Republicans are usually lobbied by oil and gas companies. They usually do well during Republicans' terms. Vice versa, during the Democrats' terms, electricity and energy become the hottest. You can see the image. So that's why it's important when the election is approaching or the winning party is in control. You have to know what sector will come in hot. You have to understand that. Understanding a sector is more important than an individual stock or a general stock. If you invest in a general stock, don't worry about that part. So, really, and here's a thing, GDP announced recently. It's reported. I see positive and good news because GDP doesn't show any much growth. I think it's perfect and good news, because if it shows much growth, it means it's possible that inflation will rise as well as interest rate. It means it would put much pressure on the stock market. But no, it's announced 1.6%. I think it's perfect and good. The last time it was 3.4% growth rate or something. Let me check. It will be quick. Give me a moment. Okay, there it is. You can see. It's announced 1.6%. It's perfect. Prior it was 3.4%, a big growth. It's perfectly fine. Actually, GDP between 2 to 3 is a healthy number. The last time it was a bit high, 3.4. Now is 1.6. It's a perfect break-even. It looks good and healthy. It means PCE report should be reduced on Friday. It's such good news. And it's likely that interest rate will remain neutral. The stock market will continue as it is. For the rest of the next quarter after earnings, the market should be doing good. So you see the overall market. It's you ride the bull or you miss it out. Your choice. I hope you can understand the overall market. And one more thing, I want to show you about earnings. One more. You can see Tesla earnings coming out hot. It almost hit all-time low. It now spikes up. It increases nearly 10%. It's pretty huge. Same with Google. The previous chart didn't show a gain because it was updated recently today. You can see obviously a big gain. it increases nearly 12%. Most earnings reports increase by 5%, but 12%. Wow, what a huge gain. And one more thing to add about the election. As you know that I showed you that an election doesn't really affect the stock market. But if you might want to take an advantage of by profiting off the event, you can trade options by buying calls or puts. When the election season approaches, VIX, the measure of implied volatility based on the price movement of S&P 500, will increase. IV will go crazy. It means it might be a good time to buy calls or puts. I'm not a financial advisor, so this is not a financial advice. I just want to share about it to you, and you can keep it in mind and decide by yourself. It's good to buy calls or puts to hedge against your portfolio. So, that'll be all. See you soon again. I will keep you updated.